a good way is to buy a smaller property and then leverage the equity that you build into that property into a bigger property and leverage that equity into an even bigger property. And the ways to do that is through things like DST.
Talk to me a little bit about the strategy for using a carryback versus like a deferred sales trust. If and kind of the pros and cons of each one.
Seller financing.
Seller financing, yeah.
Gotcha. Yeah, I wasn't super familiar with the DST until Brett came on the podcast, and so I'm by no means an expert, and so I don't want to try to give any advice to anybody because it's not something I know. And so, I mean, seller financing, it's always good just because you can, it's easier to sell a property with seller financing because then the buyer doesn't, the buyer doesn't have to go out and get financing for the property, especially properties that aren't at they haven't been stabilized, so they're not at maximum capacity with market rates, all that stuff. Seller financing makes it work, but if you've already stabilized the property and you really want to level up and you want to take that equity that you have and put it into a bigger property, which is a great strategy for anybody who's in commercial. They want to get to that 100, 200 unit apartment building, the 1,000 unit self-storage facility, whatever, the acre of industrial properties. A good way is to buy a smaller property and then leverage the equity that you build into that property into a bigger property and leverage that equity into an even bigger property. And the ways to do that is through things like DST and 1031s.
You brought up a really interesting point there, right? Like the property is easier to sell through seller financing, right? If you have it not totally stabilized and so on and so forth. So, and by the way, none of these strategies, right, like are the wrong answer, right, in certain situations. There's times when you would want to use seller financing, like, when Gabe, like you have like a property that's not fully stabilized and it makes the sale and it makes the deal, like, yeah, it's sweet, right? Like get it done, right? Sometimes you find an up leg with a 1031 that just makes a ton of sense. Like, great, use the 1031. Like, it's phenomenal, like strategy. Like all of these strategies, right, have their place. So it's not like one is like supreme ruler of them all. There are benefits, right, to each one, and there are pros and cons and so on and so forth. And we believe the DST or the deferred sales trust, right, has a lot more pros than it does cons. One of the things that we've run into with the seller financing aspect of things is sometimes, right, when you're basically giving that particular asset's value to somebody else, right? Now they're paying you, but should they not pay you anymore and you have to go foreclose and they didn't take care of the property, right? You get a devalued property back, right? And now you got to go and you got to put capex in and you got to fix it and get it back up to where it is. Now, that might not be the worst thing ever, right? But a lot of your payments might go back into fixing that up so you could turn around and sell it again, right? So the other thing is you don't get all your capital up front. Yep. Now you do get cash flow, right? If you're getting 5% interest only on $1 million, like that's $50,000 a year, like deal, right? Like, so, it just kind of depends on what you need and where you're going. One of the things that's nice with the deferred sales trust is it's like kind of agnostic. So you can take all the capital, redeploy it and wait on the sidelines till you find a good deal and then go back into real estate when you want.